Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of September the 11th, 2017. Now to get started this week we're going to begin where we always do with that very important US dollar index, which a lot of Forex traders in my respectful opinion don't pay enough attention to. Now when we look at the US dollar index, the initial triple EMA cross from VantagePoint came almost 3 long months ago here, and the dollar you can see has had retracement points, but it's been heading lower this entire time. We have yet another new signal from VantagePoint as our neural index turns lower, our predicted short, medium, and long-term differences breaking below the zero line, yet another crossover to the predicted on the predicted MACD to the downside, and of course we cannot hold above the 50 level on the predicted RSI, and right now, as long as we're below 40 on the predicted RSI, we're seeing momentum. Now, we have a swing low here that could provide some support for the dollar, but the reality is with the hurricanes now hitting into the US, that's more money coming out of the US that needs to be spent on rebuilding on an already very, very heavy debt load. So the hurricane, I hope everybody's safe, but this is not a good thing for the US dollar. So when we look at this, how is that going to affect our major pairs? Well, when we look at the euro, you can see that as we had that sell-off on the dollar index, we had an immediate, almost immediate buy signal on euro US. Now, a lot of analysts have been very mixed on this, saying that, you know, the euro is not going above 119. Then they said, okay, 120, it's not going above that either. Whereas with the VantagePoint software, with their triple EMA cross, we did have periods of indecision in the market, but you can see that that met with strong buying off of this 18-day predicted moving average. Now that critical level for next week is coming in at 118.79, so we have clear, strong buying interest down to this level. Now with the dollar index, I've talked about this for basically months now, where in my respectful opinion, again, the dollar is going into a longer term bear cycle. The dollar's been in a very strong bull cycle since 2010. These bull cycles usually last 6 to 8 years. We're right at the end of this, guys. So not only can the euro move higher, but for a number of years, I've traded the euro in the 140, 150, and almost into the 160 area. So again, in my respectful opinion, the euro is a bargain to be buying it at 120. Doesn't mean it isn't going to have retracements and that it's going to move lower, but ultimately these indicators from VantagePoint don't lie. We've got another crossover to the upside on the predicted MACD. The predicted RSI has had heavy momentum. You can see how it's been holding above that 50 level, and on any break of the 40 level, we see momentum build into the market. So as long for next week, buying areas are from starting at 120 all the way down to 118.79, but very heavy support in this 119.36 to 118.79 area. So we want to keep it simple here. We've got a trend line now that intersects between the VantagePoint 8-day and 18-day predicted moving average, and this area is likely to hold. Now with US Swiss franc, we've got a pretty big double bottom down here that's now being challenged by the Swiss franc bears. So the dollar bulls are again could be getting ready to throw in the towel here, and we could see a bigger move down to the downside on US Swiss franc. So if Euro US does break higher, as I've suggested over the coming weeks, then US Swiss franc is likely to move lower, and that indirectly suggests that the global equity markets are going to follow. Now, with the British pound US dollar, that was a great trade here this week that I've talked about earlier in the week. We had this VantagePoint triple EMA cross, and guys, when we provide this kind of when we combine this kind of indicator, we've got a trend line break, a triple EMA cross from VantagePoint, the neural index here giving us a multiple day warning that this was going to happen, the crossover on the predicted MACD, and again that break of the 60 level on the predicted RSI really did lead to a significant move. Now again, in my opinion, this was a very easy trade to the savvy trader who knows what to look for. So again, very much an early warning sign. that I talked about earlier in the week. I talked about this in last week's Forex Weekly Outlook, and then I followed it up with a trade here this week, and again, a very nice move. Now, we have a swing high that is a bit of a concern to me. That's coming in at about the 132.70 area. If we can clear this area, guys, then that will lead to a new leg up on the British pound US dollar pair. And I see, and again, I think in my opinion, we're going to see there's a better than 50% probability that we are going much higher on the pound dollar. Now, once again, the pound dollar over the last 5, 10, 15 years, I've traded this close to the 190 mark, the 2 level. So to say that there isn't any room to the upside is simply not factual. The upside is wide open. Right now, it would appear, if anything, the downside is limited. So with our critical level, with the close of 131.93, we have support coming in at the VantagePoint 3-day, 131.16, but our critical level is 129.83. So we would look to buy down into this area between 131.16 and 129.83. Now, as we move into the dollar-yen pair, in last week's Forex Weekly Outlook, I did discuss at length that selling the dollar-yen pair into any kind of rally is a very reasonable play. I've talked extensively about this 108.10 area. We're closing the week at 107.82. This suggests, at least to me, that we are going significantly lower on this particular pair, but we need the equity markets moving lower also. So as long as the global stock markets are moving lower, dollar yen has no upside traction, despite what you're hearing on Fibonacci, Elliott wave, a lot of these different indicators. It comes down to the fact that intermarket correlations reign supreme here, guys. So if the global equity market starts selling off, the dollar yen is going to probably move into the 104, 105 area rather quickly. Now, the key vantage point level, 109.46, all the way up to the 3-day at 108.43. So basically our sell zones are between 108.43 and this critical vantage point level at 109.46. Now, the other level I do want to talk about here is the 108.10, 108.20. We may not be able to get back into this, and this could very well be a new range top. So if it is a new range top, then basically we're not going to get much over 108 here, guys. Maybe 108.30, 108.40, and then it's going to go into another free fall. So keep an eye out on that to start the week. I think that could be a very, very good short trade. Now, as we come into our main 3 commodity currencies, the CAD, the Aussie, the New Zealand, they're all very similar trades here, which I always try and point out to my own clients, and I want to point it out to you guys also. The key vantage point level comes in at 124.21. Now, what's interesting here is what is the main driver is the fact that the Bank of Canada has raised rates. In my respectful opinion, I'm unclear why they raised rates. There is no inflation in Canada. So when you're talking about raising rates, in most cases, central banks don't do that, without inflation. So in Canada, there's no wage inflation. Growth is minimal. So when you punch numbers into when the Bank of Canada pumps numbers into a model looking for growth, and it's potentially there or it's coming, that's not really a great reason to be hiking rates. And when you have no inflation to match that, that suggests that the Bank of Canada has this potentially very, very wrong. Commodity prices are still down. Oil, despite the hurricane, is still very low. None of this is a positive. So the Bank of Canada is probably shooting themselves in the foot here by creating a very strong Canadian dollar. That is not what the Canadian government would want here. So when I look at this, it tells me, first of all, we are grossly oversold on this pair, and when more economists start to talk about this and look at the actual underlying information, why they raised rates, it's on potential growth, not current growth. And again, without the inflation component in there, I think they have it wrong, to be perfectly blunt. So we'll see how this one plays out, but we have resistance now starting at 121.71, the VantagePoint 3-day predicted moving average, and moving all the way up to 124.21. If we can break back up above 124.21, then basically the market market is not buying what the Bank of Canada is selling, and they are bailing out of buying Canadian dollars. Now, with our final two pairs, Aussie and New Zealand, Aussie-US, again, I've talked about this one over the last several months, and I've stated that I'm in the bull camp here, and the reason I am is because mainly not because of Aussie strength, so to speak, but it's more about dollar weakness. And when we look at dollar weakness, the Aussie-US has been in a long-term bear cycle, again, probably about 6 years now, but it's recovering. So buying high is not necessarily a bad thing. Our critical vantage point level, 79.65, all the way up to 80.43, with a very bullish close of 80.54. So if we can hold above this vantage point level at 79.65, then we are going considerably higher here, guys. And again, if we look at this cycle, even over the last year, this didn't happen overnight. We hit a bottom down here around 71 all the way back in January of this year, and you can see that basically for the calendar year 2017, it's pretty much indisputable that the Aussie has had retracement points, but ultimately has moved significantly higher. And to say that that's going to likely continue would be very reasonable to come to that conclusion. So with this recent trend break, this break of these swing highs, basically the top side is wide open, despite the fact we've had these big moves to the upside, but they haven't come overnight. They've been over a long period of time. So when I look at this, I watch the key vantage point levels, 80.43 down to 79.65, and I'm simply looking for a buying opportunity. Now, New Zealand US, the same trade here basically, guys. New Zealand's been a little weaker, and that's because of this Aussie strength. So New Zealand's going to play catch up a little bit, but we've managed to, we've got a good trend line support coming in at 71.50. All stops below there, but longs are heavily favored on this particular pair here, guys. So when I look at this, we've got a fresh triple EMA cross from VantagePoint, the 3-day crossing over the 8-day and the 18-day predicted moving average, just barely, but that's good enough for me. Our neural index is turning higher. Our predicted differences are turning higher. We've got 58.2 on the predicted RSI and a crossover to the upside on the predicted MACD. So again, buying this thing down to 72.37, I would be a buyer on this one, guys, all the way down to 71.50. I think we are going higher. Despite the Aussie strength, the New Zealand still represents a very good place to sell US dollars.